Interest rates are a powerful tool to force ordinary citizens to put their hard-earned savings into risky places in order to keep up with inflation. As the years go by, with essentially no return from traditional savings accounts, people are forced to turn to investments, whether that is mutual funds, stocks, bonds, or others, just to keep up. Investment companies are forced to do the same. With corporate profits always demanding more, the push to take risk is ever increasing. With negative interest rates now becoming a global policy, the distortions of the financial markets will be impossible to calculate. Hang on to your seats. It's going to be a bumpy ride. You came here for the truth, so let me unveil that for you. Today we will discuss how the Federal Reserve is saying negative interest rates are on the table. That's right, and I'll show you even the history behind this. Let's begin with this article right away out of Bloomberg. Federal Reserve Chairman Janet Yellen didn't rule out using negative interest rates in a future crisis, but emphasized that they would be adopted as a last resort. Well, they are the lender of last resort, so of course we can expect them to do this at any moment. Right here, while it would not completely rule out the use of negative interest rates in some future very adverse scenario, like a collapse, policymakers would need to consider a wide range of issues before employing this tool in the United States, including the potential for unintended consequences. Of course, if you bring interest rates down, you're going to have a problem. So, let's look at this here. First of all, just to cover the last line, it comes at a time when the Federal Reserve is debating whether to raise interest rates. And they talk about the euro and Japan. Of course, they're saying, should we increase interest rates? They tried to do this before and essentially brought them up to such a degree that it's not noticeable at all. Because it was 0 to 0.25. It was actually a range. And now it's 0.25 to 0.5. So really, it could have gone up such a marginal amount. In fact, it could have went up 0, if you think about it. So let's look at this here historically. Back in 2010, when Janet Yellen was actually the San Francisco Fed president, she said this: if it were positive to take interest rates into negative territory, I would be voting for that. That's a quote. She said, if I could do negative interest rates, I'm all for it. And this is at the time when they have introducing their QE 1, 2, and 3 in that time frame there. There is QE already at this time, and they would she's suggesting, let's go negative interest rates as well. But of course, it has to be positive. But the truth of the matter is that any action they take is positive to the stock market because they are pumping it up directly. They're using these methods to pump up the stock market. And that, even though individuals in the Federal Reserve, I just covered this in my previous video, individuals there said actually they don't correlate. But anyway, let's move on to what I wrote about in my book, showing you the diagram of the 30-year mortgage. Year over year declines. Interest rates have been continuing to decline. As a result, you see the savings rate go directly in correlation with this chart. So you want to know if people will save, look at the interest rates. You don't even need to see the personal savings rate, just see the interest rates and you have the answer. Let's move into this here. As you look at spending being a huge problem in the United States, in fact, in all countries around the world, where the debt to GDP ratio has become astronomical for most nations. In fact, if it's anywhere near 100%, they've already gone past the point of no return. That's, an estimate. That's just a generalization. It's not a fact. But the way I look at it is, if your economy is not good enough to keep up with your debt. And that includes, or doesn't include, I should say, all of the unfunded liabilities. How are you ever going to pay this back? It's a joke. Well, the U.S. Senate's first spending bill of 2016 spends more than President Barack Emperor Obama requested and lacked significant conservative amendments, but it sailed to passage in the Republican-led Senate. So here we go, right here. They'll approve it 90-8, saying that, you know what, spend more money. Let's just do this. Let's just spend as much money as we possibly can, and we will get this economy going yet again. You know, any cutbacks on not actually taking money away, but cutbacks on the amount they intend on spending on that increase. So it's an increase, let's say, of $1 billion, and they say, you know what, instead of $1 billion, we're going to do 999 million. And then they'll say, you know what, that's crazy. You're cutting back. You are a Republican. You are a conservative. You should be voted out. You are bad. You hate all this. It's ridiculous when you actually look at it and really investigate it. But what we need to understand is that the spending that's going on needs to happen, everyone. It is actually crucial that they continue to spend more money because the system will collapse. As a result, it's a system built upon debt. Now, just a quick article wanted to cover the fact that the New York Times, talking about Russia, talking about the US, and nuclear war. Nuclear war. That's right. We have been saying right from when the story started that our experts are convinced that the deployment of ABM system poses a certain threat to the Russian Federation. That's a Kremlin spokesman. In fact, the measures are being taken to ensure the necessary level of scrutiny for Russia. The president himself, let me remind you, has repeatedly asked who the system will work against. And what they're talking about here is the anti-ballistic missile system that was introduced in Europe, and right here basically being extremely close to where Russia is. And Russia's wondering, okay, you're putting it here. Who's it for? Who is this for? Who is it against? Who's it going to work against? Well, they're talking about the rogue states. And they're suggesting that Iran is one of those. So they want to put this here, but of course that's not just the case. They want to get their military weaponry as close to their enemies as possible. And in this case, many cases, in fact, there's a lot of rhetoric and saber rattling in between the US, NATO, and the so-called other side would be Russia and China in particular. And then you have Brazil. Brazil is really in chaos right now. As you see, they attempted to impeach the president. What happened though? But in Brazil, Mrs. Rousseff has not yet been impeached, legal scholars say. In Brazil, the term impeachment is only used after a conviction is made in the trial. After Brazil's Senate voted against her on Thursday, now they have to go ahead and she's going to step aside for the impeachment trial, which could last 6 months. If she is absolved, she will not have been impeached. And it's not the first time that something like this has happened. And then back in 1992, the individual had to step aside. So we'll see what happens. But it's just a long, drawn-out process. But it shows you when they're going to impeach a person, they don't want to be there. Something's wrong. You need to get out. Step aside. Out of the Financial Times. Another bank, again, the victim of a cyber attack. I'm not going to get into the article. Basically, what we're looking at here, the reason I bring this up, is that our money in the financial system is not safe. It is absolutely not safe, and there is more and more mounting evidence to prove this. We know that. We know it's not safe. How many times did I cover the articles where they showed individuals' bank accounts listing at $0 in the bank account when they know specifically that they had money in there? And then they say, you know what, it's a glitch. And then they fix it and their money's back. But for that period of time, they had no money. They had no access to that money. It was gone. And what if they don't fix the glitch? What if they say, we can't find the glitch? In fact, we don't think you had any money. And then let's say you had to go back in your paperwork, you had to prove it, then you have to get your lawyer involved and everything else. And meanwhile, you didn't have any money. You had to start selling things around your house. You needed to maybe move out of your house if it took long enough. You needed to sell and rent and whatever. This is the danger of relying on this system. That's why I urge everyone to take your money and run. Go on, take your money and run, all right? And this, last but not least, how much have sales jumped in luxury homes? You can see all around the world. And there I am, number 2, Toronto. That's right, booming in the real estate market. That's right. Everyone here seems to have lots and lots of money. Of course, the debt to income ratio is the highest it's ever been. People are in the most personal debt ever in history right now. But look at this. Luxury homes selling off the charts. You look around Toronto and you see in some areas where the homes consistently sell for 30% over the asking price. 30% over. So you're looking at a $1 million home, which is not absurd at all in many areas around Toronto. $1 million listing price, within a couple days it sells off the market at $1.3 million. That is the current status of the real estate market. That's called the bubble. And of course, like all bubbles, they will pop. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my book, The Money GPS, even more informative. If you want to look through the book, just head over to Amazon and they have a look inside feature which allows you to flip through the pages of the book to see if you like it. Take care. Bye.